Welcome back to Dinar Community Channel. The atmosphere surrounding global financial markets shifted dramatically when reports of the Iraqi dinar's long-awaited revaluation began to materialize. For years, speculation swirled around the possibility that the Iraqi currency would be restored to a rate that reflected the nation's immense oil wealth, modernization efforts, and regional influence. But few could have predicted the raw intensity of the scenes unfolding in financial districts across the globe. As confirmation began trickling through both official channels and eyewitness testimony, IQD holders mobilized en masse, crowding banks, exchange centers, and financial service locations in unprecedented numbers. What began as quiet anticipation evolved into a storm, with investors pouring into institutions in search of immediate conversion. The revaluation reality hit hard, reshaping not only individual fortunes but the global conversation on wealth redistribution and economic realignment. In city after city, the sight was the same. Banks were overwhelmed by lines of dinar holders clutching their bundles of currency, many of whom had been waiting years, some decades, for this precise moment. The revaluation event was not merely an economic adjustment, it was the culmination of patience, strategy, faith, and in many cases, desperation. People who had once been dismissed as speculative dreamers suddenly found themselves at the center of a financial event of historic proportions. The walls of financial institutions strained under the pressure of demand as tellers worked tirelessly to process transactions, while behind the scenes, executives scrambled to coordinate with global exchange systems to keep liquidity flowing. The revaluation of the Iraqi dinar did not come quietly. It struck with the force of a tidal wave, sweeping across financial systems and catching unprepared investors and policymakers off guard. Overnight, what had been dismissed by mainstream voices as fantasy transformed into stark financial reality. The revaluation rates revealed figures far higher than many dared to predict. For countless investors, the calculations in their minds shifted from hopeful speculation to concrete arithmetic. Bank balances that once represented modest savings now ballooned into life-changing sums. Yet alongside jubilation came chaos, uncertainty, and in some cases, panic. Inside financial institutions, managers enforced strict controls to ensure orderly processing. Priority queues were established, appointment systems attempted, and security presence was doubled to handle the surge of dinar holders. For some, frustration mounted as systems buckled under demand. Long waits, limited exchange windows, and rumors of fluctuating rates only added to the pressure. Stories circulated of people camping outside banks overnight to secure a place in line, or rushing to alternative institutions in search of faster service. Others described seeing elderly investors leaning on canes, young families with children in tow, and seasoned business professionals standing side by side, united by their shared goal of exchange. The broader financial world could not ignore the spectacle. Market analysts, who had long dismissed IQD speculation as a fringe pursuit, were forced to reevaluate. Television networks broadcast live footage of crowded financial centers, while economists debated the implications. How could a single revaluation trigger such a massive redistribution of personal wealth across multiple continents? What would this sudden surge in liquidity mean for local economies, inflationary pressures, and consumer spending patterns? Would those who cashed in their dinar flood housing markets, buy up businesses, or retreat into conservative investment vehicles to preserve newfound fortunes? The reality was complex. For every success story of an investor turning thousands into millions, there were tales of mismanagement, hesitation, or outright scams. Opportunists quickly surfaced, attempting to exploit the confusion. Reports of unauthorized exchange offers, fraudulent contract rate promises, and misleading investment schemes proliferated in the wake of the frenzy. Financial regulators scrambled to warn the public against rushing into agreements without verification. Bankers urged customers to follow official protocols and remain patient. Yet amid the whirlwind, emotion often overpowered logic. Some individuals accepted questionable deals in the hope of immediate payout, only to regret their haste later. At a deeper level, the revaluation event carried profound psychological impact. For many, holding Iraqi dinar had become not just an investment but a long-standing part of their identity. Entire communities formed around the belief in an eventual RV, sustaining hope through countless rumors, delays, and denials. Now, as the revaluation unfolded in real time, these communities experienced an emotional surge unlike anything seen before. Forums lit up with first-hand accounts of exchanges, confirmations of bank receipts, and celebratory messages. What had once been theory turned into testimony, and testimony into global headlines. Governments, too, faced unexpected pressure. Policymakers had to balance the influx of new millionaires with the broader need for economic stability. How should tax codes apply to sudden windfalls derived from foreign currency exchanges? Should financial institutions impose structured payouts to prevent destabilization? Could smaller economies withstand an immediate injection of liquidity from returning expatriates armed with newly converted fortunes? These questions dominated the airwaves and the back rooms of government offices alike. Iraq, at the heart of it all, emerged as a nation whose currency shift had ripple effects far beyond its borders. Not all reactions were celebratory. Critics warned that the frenzy could ignite dangerous economic imbalances. The sudden wealth surge risked inflating asset bubbles as eager investors poured money into real estate, luxury goods, and speculative ventures. Others pointed to the ethical questions surrounding a system where those fortunate enough to hold physical dinar reaped immense rewards while broader populations remained locked out. Was the revaluation truly a tool for economic restructuring, or merely a windfall for a select group of believers? Debates flared as markets reacted, and the social fabric of entire communities began to shift under the weight of new wealth. Still, the personal stories carried the most emotional weight. Families that had once struggled paycheck to paycheck now envisioned paying off debts, funding education, and securing generational stability. Elderly investors who had endured years of skepticism saw their perseverance rewarded. Small business owners spoke of expansion opportunities now within reach. Charitable groups reported sudden surges in donations as grateful individuals sought to give back. Yet alongside triumph were moments of sobering reflection. Some investors admitted they felt overwhelmed, uncertain how to responsibly handle such transformative sums. Financial planners, wealth managers, and legal advisors suddenly found themselves in high demand, tasked with guiding newly wealthy clients through the complexities of tax planning, asset protection, and legacy management. Banking institutions braced for weeks of sustained pressure. The first storm of exchanges represented only the tip of the iceberg, as millions of holders around the world prepared to follow. Security concerns mounted as reports of attempted robberies and scams targeted those known to be participating in exchanges. Law enforcement coordinated with banks to ensure safety, yet fears lingered. In some cases, individuals opted to remain discreet, exchanging quietly and avoiding public disclosure. In others, open celebrations drew attention, both positive and predatory. Internationally, financial markets reacted with volatility. Currencies fluctuated as speculators attempted to gauge the long-term effects of Iraq's move. Oil markets, tied closely to the nation's economic foundation, saw renewed interest. Regional trade agreements were reconsidered in light of Iraq's strengthened financial position. The revaluation not only altered personal fortunes but also reshaped geopolitical balances. Nations once dismissive of Iraq's economic recovery now sought partnerships, while global institutions like the IMF and World Bank issued carefully worded statements acknowledging the significance of the development. For ordinary citizens outside the dinar community, the scenes playing out seemed surreal. Social media overflowed with videos of jubilant investors holding up receipts, cars pulling out of bank parking lots loaded with smiling families, and heated arguments breaking out in overcrowded lobbies. The imagery was unlike anything previously witnessed in the financial sphere. Where stock market surges and crypto booms had once defined wealth stories, now physical lines at brick-and-mortar banks became the symbol of transformation. The revaluation was not confined to screens or charts, it was lived, visible, and tangible. As days stretched into weeks, the frenzy began to normalize, though its effects lingered. Exchange appointments became more structured, rates stabilized, and systems adapted. Yet the memory of those first chaotic days, the storming of banks, the crashing of phone lines, the exhaustion of tellers, the jubilation of investors, remained etched in collective consciousness. Analysts predicted that historians would look back on this event as one of the most extraordinary wealth redistributions in modern history, a phenomenon born out of a combination of geopolitics, patience, and sheer belief. For the IQD community, vindication came at a heavy price. The reality of the revaluation hit hard, not only in terms of processing chaos but also in the sobering responsibility of newfound wealth. Dreams collided with obligations, celebrations with stress, and opportunities with risks. The revaluation was no longer a distant hope whispered in online forums, it was an undeniable reality shaping lives, markets, and nations. And for those who had once been dismissed as unrealistic dreamers, the sight of stormed banks and overflowing exchange centers offered the ultimate proof. Belief had finally become reality, and reality had rewritten the rules of wealth forever. Like and subscribe for more videos.